Welcome back. In today's show, we are focusing on the moves in crypto as Bitcoin broke below that key $30,000 mark and still holding just slightly below it here. Ethereum also seeing a bit of a slide lower here as the broader markets recover. Crypto still moving in the wrong direction. And for more on that, I want to bring on David Greider, Fundstrat, head of digital asset research, joins us once again. And David, I mean, we've been talking about this. Obviously, crypto is pretty volatile. Since the beginning of the year, you've been calling for 100,000 in Bitcoin by the end of the year. I mean, what do you make of the moves we've seen play out? And I guess, we know things can move rather quickly in the crypto space, but what's your take on where we sit here now?
Hey, Zach, thanks a lot for having me on. I think just to kind of recap for folks, I mean, crypto had quite the run over the balance of the year. I think we were on your show back in kind of around the Coinbase IPO talking about how the market was kind of having a healthy cooling off around then. And, I think what we've seen really since, putting kind of the Elon stuff aside and the kind of China stuff is, another point that's kind of taken over with the market is, we've kind of gone to the doldrums of summer when it looks like, a lot of kind of institutional money managers have, for taking some money off the table kind of earlier in the year to kind of lock in some gains. We think that that's kind of a new incentive that's kind of happened in the market as it's kind of matured. And then also we've just seen, we think institutional capital has kind of stepped away for the summer. A lot of folks are, taking their time off to reset, and, crypto being a volatile asset that is, I think that that's pulled some capital out of the market as well. And that's something that we can see in, some of the volumes that have been a little lower. And, I think that the way that the market is trading, a few weeks back, we were writing about how this would be, we thought for a little bit, kind of a choppy sideways market. And that's kind of what we're getting right now with, the way that the market's been reacting.
Yeah, break that down for me a bit more. I mean, if we're talking about the more recent moves where we saw Bitcoin fall below the $30,000 handle, how much of this is about de-risking, just like we've seen in the equity space? And ultimately, what kind of macro factors do you think could continue to drive the trades?
Yeah, absolutely. I do think that there's actually a lot of macro factors right now that kind of contributed to this most recent move. If I look at some of the things that we think are kind of important for Bitcoin and crypto as a risk-on asset, I think that they have softened a bit, some of them. I think things like, high yield is showing some softening, and you're seeing some softening. Obviously, the stock market, we're rebounding a bit today, but also in EM currencies and EM markets. So, I think that picture's a little softer. I mean, we'll see how it kind of plays out over, the balance of the year. But I think that the thing to keep in mind, right, where we are today, hitting this kind of 29,000 level, right, is, since we've had the kind of end of Q1 into Q2 sell-off, we have come into this, 30 handle range and this kind of 29 range. We've tested that. I believe this is the fourth time, at least on the candles, that we've kind of gone through that. We've managed to hold it. So I think that that's pretty encouraging from that standpoint. But there's a lot of macro factors. We have to see how that kind of unfolds.
And David, I mean, just when you look at that, you got the $100,000 price target on Bitcoin, but also Ethereum, 10,500, the target there, almost 500% upside here if you think about where we're at. But when you think about what's going on with the BlockFi news, we got one of those giant crypto lenders getting a cease and desist letter in New Jersey. I wonder how much that support. I mean, when you looked at your price target on Ethereum, it was interesting because you can calculate how much money is flowing in to that protocol with the explosion of decentralized finance and DeFi protocols built on Ethereum. And there are real numbers around people still turning to that. And I assume, there might be more reason to turn to that if regulators are going to go after these centralized lending platforms like a BlockFi. It could catch a boost there. I mean, if you were to look at one of those price targets maybe now and say which one you might have more confidence in, I know they're linked. Ethereum tends to go the same direction as Bitcoin. But I mean, how much of that is still driving your thesis around why you're so bullish on Ethereum?
Yeah, I mean, I definitely think that these crypto economies move together. So there's a lot of a flow story that you kind of can't untangle. But I think that, there's a lot of investors who are probably looking at Ethereum probably as, a crypto cloud stock. And to the extent that the fundamentals can kind of really justify based on usage and fees burned and revenues to the network, right, it being kind of fundamentally valued at a much higher level, right, much like one of the FANGs or the big techs. I think that's something that's very possible. I think, it's actually positive with the news that's happening kind of with BlockFi for some of the other crypto assets that, are like Ethereum that are kind of already been said to have been decentralized commodities, not securities. And that's maybe the question at hand. And we don't really know how that's going to unfold. I think BlockFi probably has a lot of good legal people behind them and probably have done diligence. So we'll see how that unfolds. But, to the extent that the Ethereum network continues to see growth usage, I think that will be really kind of key to its valuation.
Yeah, a lot of people shaky right now on where things can go from here, but not the case for David Greider, who remains confident there. Appreciate you coming on here to chat with us. Fundstrat's head in digital asset research. Thanks again for the time, man. Be well.